Hi everyone, it's Ian Cooper with Trader Insight. We wanted to take a quick look at GoPro, symbol GPRO. This thing looks like Twitter out of the gate, and we still strongly believe it will crash and burn in no time at all. The herd is all over this, pushing it too high, too fast. We've seen this scenario before, and there is a quicker, easier way to trade this. When the hype dies, so will the stock. I'd like to see it between $10 and $20 before I'll even think about putting money into it. It's now at 60 times 2013 earnings. Now, anytime the street talks up a coming IPO as hotly anticipated, run. On the very first day of trading, as we saw here, everyone mob rushes these hot IPOs only to find themselves deep in the red shortly thereafter. If they were serious traders, though, they'd have slipped right through the back door and bought all of the high IPOs at just $45 a share. But what do they know? They're sheep. Earlier this year, we highlighted 8 of the most hotly anticipated IPOs of the year, running from January 2013 to December 2013. 4 of them are sitting at break even. The other 4 are down between 26% and 53% apiece because the hype died. They didn't live up to expectations. But here's how you could have done. Let's switch the chart here. This is your FPX, your First Trust IPOX 100 Index Fund. Okay? The street doesn't care about the average investor. Your average broker is in it for himself, not you. The difference between a smart investor and a foolish one is simple. The fool follows the herd. And in this case, the fool is following the herd into GoPro. Instead, they should have been well positioned in the FPX. Okay? Between January 23rd, 2014 and June 26, 16 hotly anticipated IPOs hit the market. Now let's assume they each priced at the low end of their IPO ranges. To buy just 1 share of each would cost you $215. To buy a total of 1,000 shares, hoping against hope you'll hit it big, would cost you more than $200,000. Now no one has that kind of money just lying around. And let's face it, most of your money would probably go up in smoke when the hype dies for all those names. The smart investors, meanwhile, are going after your FPX, or your First Trust IPOX 100 Index Fund on the New York Stock Exchange, at $45 a pop for exposure to all of the hot IPOs that you just bought individually. This isn't rocket science. This is common sense investing. Ahead of these amazingly hot IPOs coming out over the last week on a toppy market, the FPX already ran well off its latest dip from 43 to more than 48. That was a $5 move before these crapshoot IPOs hit. Now listen, you either want to make money or you don't. If you don't waste your time, get out of the market. The problem with the GoPro IPO is everyone thinks they have to own it, but you really don't, and I wouldn't advise it, especially at these toppy levels. While the company does warn of significant risk in its S1 filing, that's not our biggest out-of-the-gate concern. With GoPro pricing well above 24, it would have a richer price-to-earnings ratio than Apple, according to the Wall Street Journal. Now, the last thing we need to see here is an overvaluation concern, which we now have, killing off most of your investment dollars in the near term. It's really not worth the time, the aggravation, or your money. Ignore the hype talk, the IPO shenanigans, trade smart, get richer, and just buy all the IPO momentum at $45 a pop with the FPX. The only thing you'll miss out on is losing money. The S1 also shows a drop-off in net income for the latest quarter. Now, there's no denying the appeal of the camera here from GoPro, but there are very real risk factors here and revenue pressures to avoid. Do not waste your money chasing a dream. Trade smart, go big, or just pack it up and go home. Again, this has been Ian Cooper with Trader Insight.